G'day traders, Rich here again. Today we're going to move on with our workflow process and look at stage 4, which is empirically testing our model's assumptions using very extended data sets. So let's get into it. So here we are, and to catch up you need to view the earlier videos in this series. But now we are at the pointy end of the process where we leave the theory behind our models and put the lab coats on and start empirically testing our assumptions. So our assumptions so far in our modelling are that price extensions associated with fat-tailed environments lead to greater benefits to our long-term profit and loss. Also, not all trends are the same in relation to their causal source. We are after a particular class of trending condition that is applicable to all liquid tradable instruments from time to time, namely the outlier, which is located in the fat tail of the distribution. Remember also, we are looking for what causes the bias as opposed to the visual identification of a trending condition. If we can isolate the causal source, we can harvest the bias that arises from it. Now, we are a specific type of trend follower that likes to understand how complex systems work. We pay less attention to the things, such as the patterns, and more attention to the processes, which are the agents of causality. For example, in a complex system such as a rainforest, we would look at the impact of a single rainforest tree and its ability to create an entire ecosystem under its canopy. There is a one-to-many relationship going on where the sum is greater than its parts in a complex system. If we destroyed the single tree, then we destroy the entire ecosystem. So it is the relationships and the dependencies of that system on that single tree and its canopy which are critical in determining the failure of that overall complex system. Despite the apparent durability of that system, there is fragility built in there. In the same way, when we observe the financial markets, we observe how the market behaves rather than look at the individual patterns, which are more emergent features that may or may not arise from different market conditions. So that's why we say we go with the flow of it all. What we are really saying is that we observe in entirety how the entire system interacts and operates, and we pay little attention to the things within it. So back to our hypothesis. We suggest that the impact of catching outliers using a breakout method is a more impactful result to our overall P&L. When we catch those anomalies in those more exotic market conditions away from the general noise and or mean reverting nature of a system. Yes, anomalies germinate from within normal market conditions, but their impact is suppressed by noise. It is when they emerge from normal market conditions that their overall impact is more dominant in the nature of overall price action. And we therefore attribute this hypothesis to an idea that in this more extreme zone, where predictive modelling breaks down, that participant behaviour in general is more likely to be coordinated than complex in nature or noisy. The participants that remain in this zone are either predating on this event, such as us price followers, or participants who have been warehousing risk and are now being squeezed in this zone. The impacts in this extreme zone are large, as predictive behaviour of those being squeezed is making them drop their predictive models and do one thing: rush for the exit gates. This is a zone where we see market capitulation behaviour start to take hold and where unidirectional momentum really takes off. So the participants tend to be doing the same thing, leading to price extensions in this zone as to price compressions occurring in more competitive, normal day-to-day conditions where a vast array of different participant behaviours are doing different things. Using our very simple breakout model, the Donchian breakout system, we let the data start speaking for itself, as we've done enough talking already. So now we have automated our simple breakout system, which is the simple Donchian breakout system described here. Now what we want to do is to test our conclusions using big data sets, using the optimizer feature of MetaTrader 4, with a few extra added bells and whistles provided by Fred in the report outputs and a bit of solid crunching in an Access database. So we are now going to walk through that process, and for our members, we provide you with these tools for you to follow along with us. So the first thing we need to do is select our testing universe from available long-range data. So let's start by selecting a fairly random universe from our available markets we have on our platform. But we need to choose those markets which have a long data look back. So dependent on your data sources, this may vary. We, for this test, use Pepperstone data off daily data. This gives us about 20 years of look back for each market in general. We need a long look back as we want to capture as broad a range of different market conditions as we can. Remember, we are testing for a principle of all liquid markets as opposed to a single market condition that may be pertinent for a specific individual market. We need to also remember that we are simply testing our hypothesis here. This small universe won't cut it when we come to the ultimate portfolio that we want to trade with. This is for testing purposes only, to test our assumptions. If we can confirm them using this small universe, then we can widen our universe to a very broad one across asset classes if possible. The particular universe we have selected for testing was based on our data availability. And you can see the selection over here in the right. Nearly all these instruments here, we had available 20 years worth of data, which therefore allowed a broad range of market conditions to be assessed with our testing method. So here we go. We're now onto the MetaTrader 4 platform. Now, Fred has already provided the expert advisor, or our algorithm, for use by our premium members. Refer to the instructional how-to guides in the members forum to find the EA to use. It's called ATS DON 5 191105, and you should be able to find it in the members forum. Now load that EA into MetaTrader and then select the strategy tester module. That will bring up this section here, which is a strategy tester. What we do is we first select the algorithm that we want to use for our testing process by using this drop-down box here. So we select our EA. The next thing we want to do is test it on our first market of our universe, which is AUD JPY. So we use the drop-down box to select AUD JPY. Then we select open prices only. This is because the algorithm actually operates on the open price, and so it is a very reliable method as opposed to having to use tick data, which really slows down the process. Now, in our date range from and to, we're after the longest available date range we can get our hands on. So if you set very wide settings that go beyond the range of your data source, such as 1st of the 1st 2000 through to 12th of the 12th 2020 in the future, the algorithm will apply within that period to whatever date range is available from your broker's platform. So we select the maximum date range available. Then we come over to our spread. And what we do is we look at the current spread on that instrument, AUD JPY on the D1 timeframe. And in this instance, we notice that it is sitting at 12 points. What we do for conservative purposes is we effectively double it to 20, recognizing that during the course of the day and during the course of months, spreads vary, and we want to choose a conservative spread so that our results are conservative in nature. Then we must make sure that we tick this optimization box here by selecting optimization. And then We are now on to clicking on the Expert Properties tab of the MT4 Strategy Tester. So let's have a look at this process in action. Here we go. We've now opened MetaTrader. We notice that we have loaded the Donchian Expert Advisor from Fred into the Expert Advisors of our file directory, and we have refreshed that directory. So now what we want to do is select the algorithm we wish to test with. So using this drop-down box, we now come to the algorithm that we wish to apply. In this case, it is ATS DON 5 191105, this one here. We now select the instrument, the first in our universe that we want to test, which is AUDJPY, which I'll just find here. Here we go. And now we want to use the open prices only method, which we select. We set our date range for the maximum possible date range possible. You can check how much data is available by going to your history center and then selecting the particular instrument, which is AUDJPY, which is a cross. Here we go. And if we look at the D1 data, we can see that we have data right up to the current day, right back to 23rd of the 9th, 1999. So for this purpose, we're going to test from the year 2000, 1st of the 1st, 2000, up to 2020 in the future, 12th of the 31st. So we have a very nice long, almost 20-year data set, lots of different market conditions in there. Now this side of the strategy tester has been set up. We now come over to here and set our spread. We notice the spread currently now is sitting at 13 points. So let's double it to that 20 in our spread area here. And now let's also check that our optimization box is ticked. We are now ready to start going into the expert properties by clicking on this tab here and then setting up our run, for which then we press the start condition and run our optimization process. So once we click on the Expert Properties tab, we now note that there are 3 tabs we need to look at: the Testing tab, the Inputs tab, and the Optimization tab. The Optimization tab we don't need to change. It's simply the Testing tab and the Inputs tab that we need to focus on. So we click on the Testing tab and we assign an initial deposit of $10,000 for each of our optimization runs across our broad universe of 15 markets. We also assign USD as the denominated currency, and we ensure it's both long and short. That's it for all the variables within the Testing tab. We then move to the Inputs tab. Now within the Inputs tab, we only test important variables such as the Donchian lookback, the initial stop, and trailing stop. We don't worry about all the other non-material variables of the core design, so we keep them constant. So in relation to which variables we're looking at the Donchian band period, we are looking at the trailing stop loss or TSL in ATR multiples, and we are looking at the initial stop loss in ATR multiples. So the EMA period we keep as constant. This is not a critical variable of the design. It's just something that we use to ensure we have momentum, and we retain the value of 10 in the dynamic EMA. We don't worry about testing that. However, the Donchian period is something we want to test, as that is part of what we're trying to validate in relation to where we find our outliers. And to do that, we note that the Inputs tab has 4 columns: value, start, step, and stop. We don't worry about the value column, as that is a column we use when we want to individually test strategies using the backtest module. It is the start, step, and stop columns that are important for the optimization. So in relation to the Donchian band period, you'll see that we assign a range from a beginning range of 50 to an end range of 700. And we use step intervals of 50. This is just to ensure we have a wide band of coverage for our Donchian lookback. And the 50 step is just to ensure that we don't have too many permutations to consider in this testing, as we're after a general principle here as opposed to any specific settings. In relation to the trailing stop loss, we have a start point of 2 and we move up to an end point of 15 with a step of 1. In the initial stop loss, we start with an initial stop loss of 2 and have combinations up to an initial stop loss of 5 with a step of 1. These are the only 3 variables that we'll be testing, and so we ensure that the tick boxes are ticked, and we ensure that the step variables and the start and the stop points are correctly assigned. That's it. So now we'll have a look at a live demonstration of how we go about this. So here we are back at MT4. We click on the expert properties. That brings up the expert properties box. We then click on the testing tab. We make sure the initial deposit is $10,000. We ensure that the currency is USD, and we ensure the positions are both long and short. Then we move to the inputs tab, and here we're concentrating on the start, the step, and the stop columns only. So just make sure that we set the fixed lots at 0.01 for this entire test. So 0.01 in the start column, nothing else assigned. In the Donchian band period, we're looking for a range from a beginning start of 50 up to an end range of 700 with steps of 50. In relation to the trailing stop loss, we are looking for a start of 2 with an end point of 15 and a step of 1. In relation to the initial stop loss, we are looking for a start of 2, an end of 5 with a step of 1. We don't worry about the break-even settings. We don't worry about the trail type. We keep that as 1, which is a step method, which is assigned in the start box. The break-even setting we keep as 0. But we ensure that the optimization runs over the initial stop loss, which is ticked, the trailing stop loss, which is ticked, the Donchian period, which is ticked. And in relation to the fixed lots, we turn this off, which ensures that the value of 0.01 is used for all our tests. So now we have done all of the inputs. In relation to the optimization tab, there are no settings we need to change here, so we don't do anything in relation to this tab. So now we have set up all of our expert properties. We have also correctly configured our strategy tester module and ensured that the optimization box is ticked. So now we are ready to run the optimization. So now that we have hit the start button, the optimization is running. And we wait for the test to fully complete its run. You'll note here on the left of your screen a progression indicator, which talks about where the current optimization process is in relation to the total number of permutations that are being tested. In this case, there are 784 different possible permutations, which are looking at the variations in the Donchian period, the initial stop, and the trailing stop. You can also select the optimization graph and see how the progress is running. Each one of these blue dots represents a completed pass over the 20-year history of one of the assigned permutations. And we also can click on the optimization results, which show the results per combination tested through the MT4 reporting functionality. But we don't actually use these reports generated within MT4 as they are pretty meaningless for our purposes. We need special report outputs generated by our algorithms themselves to tell us what is going on. So now that the test is complete, we can see that we have undertaken 784 of 784 possible permutations on AUD JPY on the D1 timeframe over this 20-year period. Now we want to go to Fred's performance files in the back end of the algorithm. And to do that, we need to select File, Open Data Folder, go to Tester, then select the Files subdirectory, then the Performance subdirectory, and then we'll see a CSV report output. We'll now have a demonstration to show you how to access this. So here we are back at MT4, 784 of 784 permutations has been undertaken. We now want to access Fred's files. Go File, Open Data Folder, select Tester, select Files, select Performance, and here we are. That's a CSV file we're after. And if we open it up, we'll see that all of these runs have now got report outputs in the way we want them, ready to assess. So while we are here, let's have a closer look at this CSV file. We'll see that in column A, we have the symbol. For this test undertaken, we're testing AUD JPY. Then we have the open date and the close date of the testing period. We have the total net profit for the entire run, comprising 47 trades in the top permutation, and a compound annual growth rate of 0.043 with a maximum drawdown of 0.5139. We had a MAR ratio of minus 0.084. The reason for that was that we actually had a negative compound annual growth rate with this top line row. Then we have maximum consecutive losses, maximum consecutive wins, and the overall percent winning, in this case 15% for this particular combination, with an average win of $448.15 and an average loss of $190.95 and a skew of positive 1.8. The columns Q, R, and S relate to margin exposure, which we don't really use for this optimization purpose. And then we come to the important variables. This is the settings used for this particular permutation. In this top row example, for instance, we had a 10 EMA, which is standard throughout. In this case, we applied a 200 period Donchian for AUD JPY with an initial stop of 2 and a trailing stop of 6. So as you can see, each row is a different permutation. And now we can either sort within the Excel spreadsheet to sort records by virtue of their profit, or alternatively, we can put this into a database. Now, because this is only one market that we have undertaken, when we are actually going to be undertaking this process across all 15 markets, you can see that with the data that's crunched here and the content of it, it gets pretty large pretty quickly. That's why we need to move this data over into a database, which allows us to do some heavy crunching to see what is going on with the data and find if there is any potential bias. So for the members on our forum, we provide a blank database for our members to use to import the CSV report files into the database so that we can comprehensively test it. And we attach this, this blank database to the bottom of our video series in our members forum. Now we need to get the data from the CSV file into the import section of the database. And once we have done that, we then paste append the file. And in this case, we see that we get 784 rows of different permutations for this particular one instrument. Now, the good news is that we have now undertaken one optimization run for one instrument. The bad news is you've got to do this 14 more times for the different markets. Those CSV files then need to be imported into this database. And to do that, we need to go to the base of each of the row, the base of the table in which we have imported our CSV file into the database. And at the base of that, we have a new record where we append new data to it. I'll show you how to do that in a demonstration. We open it up. Now we select the first row, starting at row 2 with the data in it, and we highlight the entire columns of data and select Control N down to go to the base of the series. You'll see that we have a total of 784 rows in this particular optimization run. Then we copy this data by selecting Control C. And now what we do is we open up the database that is attached at the base of this video series for forum members. And when you open it, you see that on the left-hand side, we've got access objects. The ones that we want to double click on is the import data table. You'll see that once we double click on it, we are now presented with a fresh table, and we highlight the very first row, and now we copy the contents that are currently held in memory into this data table by selecting Control V, or the paste function. Take some time to copy, and then we'll see that in total we have at the base of the screen 784 records pasted successfully into the database. That now completes the importing of the AUD-JPY D1 data into the database, and now we go back and we do the 14 other markets and do exactly the same process. And to get that information into this database, we need to go to a new record. To do that, we use the navigation buttons at the base of the database to select the new record. When we click on that, we find we now have a blank row, which is highlighted. Make sure we keep it highlighted, and we copy and paste what's held in memory from the CSV file for the new instrument into this particular section. I'll show you now what the completed table looks like at the end of this entire process of undertaking 15 optimization runs. So here we have now pasted the last instrument of our entire universe, which is silver, into the database at the very end of the table. And in total, we can see that we have now got 11,760 records, which comprise 15 markets, each with 784 different possible permutations in them. You'll also notice that the total trades for all combinations is about 250,000, so more than enough sample size here so that we can do some rigorous crunching to look at whether there is any bias in our Donchian lookback or in our trailing stop mechanism. So now that we've got all the data into the database, we can now go to some of the more advanced functionality of the database by selecting the summary report tab, and by double clicking that, we'll see now we have a summary report that consolidates the particular permutations into the entire universe of 15 markets. For instance, this particular row here comprises all of those particular combinations with a Donchian period of 350, a 2's trailing stop, initial stop, a 13 trailing stop, and an EMA of 10. This was applied across 15 markets, of which 8 markets of the 15 were profitable, 7 were losers. Now, I think we'll leave the process here, as the next video we'll go into is some of the conclusions we get out of this data and how it supports the validity of our theoretical model in relation to our assumptions where to find the outlier. But I hope you enjoyed this session. It was quite technical in nature and very long, so I appreciate your patience in bearing with me. But it's a necessary process, this data validation phase, and you're probably not used to using some of these tools, so it's necessary to inform you about how to use them. Don't be worried too much about the Access database. We'll have plenty of opportunity in the forum to answer queries in relation to deletion of data, addition of data, etc. It's just to allow you to get an appreciation of how we can effectively analyse such large data sets quite efficiently using a database as opposed to a spreadsheet. So thanks for joining me. If you liked this presentation and you have queries, then don't forget to join up with atstrading-solutions.com and become a member of our forum. And if you like this video, then please press subscribe. So thanks very much for watching. Cheers.